Hello, my name is Jen Dimitrescu, and I've been a real estate broker in Toronto for the past 16 years. In addition to doing real estate, I also run a consulting company where I help other agents build their business skills so that they can run their business in a more effective and efficient manner. Today, I'm super excited because my favorite mortgage broker, Lena, and I are going to be sharing a lot of information about ways that you can help yourself out in the changing market. So, Lena, why don't you tell us a little bit about yourself?
Sure. Hi, everyone. My name is Lena Hanjanians. I'm a mortgage broker and the owner of Fuse Mortgage. I've been working in Toronto in this field for over 18 years, and I've helped thousands of clients navigate the mortgage process and have enjoyed watching countless clients of mine achieve their financing goals.
Including many of my clients,
Yes.
which has been great. So, with rising interest rates, people are always looking for ways to close a deal and or to make a move while minimizing costs. And today we're going to look at three alternative ways to look at financing for your next property, or if you are a seller looking to sell a property that isn't quite moving, different ways that you can be marketing your property that might attract more buyers and ultimately get you a higher price. These are not wildly known in the industry, but we wanted to share something that could really help you, the public, out. So, the three things that we're going to be discussing today are porting, assumptions, and VTBs, which are vendor takebacks. So, let's break these down. Porting. So, Lena, what is porting?
Right. So, Jen, this is one of the more popular ones of the three that we talk about, something that a lot of borrowers will do. So what is porting? Porting is when you own a home with a mortgage, an existing mortgage, and when you purchase a new home, you move the existing mortgage with you from one property to the other. The benefit to this is that now you're not breaking your mortgage. You are able to maintain your current contract, your current rate. And in today's market, that often means a much lower rate than what's available to the market, right now. The one major thing you need to understand about porting, though, is that you do need to sell and buy. Sorry, let me rephrase. You do need to sell your property on paper, a firm sale agreement before you take possession of your new property. That is the only way to do a port.
And so, what's actually involved with porting?
So what's involved, aside from what I've just mentioned, is a typical mortgage application. So you're going to revisit, you're going to reconnect with your previous mortgage broker who assisted you, or a new mortgage broker if that other mortgage broker is now unavailable, or if you have a different mortgage professional, reach out to them. They will complete a typical mortgage application, same as you did initially. You do need to requalify to do the port. However, you will be seeking financing from the same lender that you currently have. So the application process is done, an approval for porting is granted, and then you just have to do the sell and buy. That said, one other piece that needs to be considered is that every financial institution might have a bit of a different they might have different terms and conditions surrounding their reporting capabilities. So make sure you speak with your mortgage professional to find out what exactly those terms and conditions are before you, bank on porting your mortgage.
So if you are a buyer or a seller right now, well, you'd be a seller because you'd be porting your mortgage. But if you're looking to buy something, then a discussion for you to have with your real estate agent is, how long might this take me? Should I look into these options? Talk with your mortgage broker or your lender in advance so that when you're having discussions with your real estate agent about the landscape and timing, as an agent, it helps me when I have all of the tools and I have all of the information, because that's ultimately going to dictate things like closing date and coordinating your buying closing date with your sale closing date, and making sure that everything is in alignment. because there may be other factors too that we need to arrange in order to make the porting happen. And to Lena's point, every lender might have different circumstances, so it's good for us to know that in advance.
Absolutely. The strategy of how you're going to proceed with the sale and the purchase is paramount to your success.
Yeah. So now let's talk about assumptions. So what is an assumption?
So this one is a less popular one that maybe you might not be aware of, and hasn't really been utilized over the last, like, honestly, throughout my career. I have not seen them.
Studied it like 17 years ago in my
Yeah,
books and have
for
never touched
sure.
it.
No,
And I had to go back
no.
and read about it. Yeah.
Absolutely. So I actually just recently saw this happen with clients of mine who had purchased a year and a half ago. They have an incredible 1.79% interest rate, and they took advantage of this. So let me tell you what it's about. What this is when you sell your home and you're not necessarily going to be buying another home. So you don't need the porting, right? You would want to port that 1.79% rate if you wanted to, right? However, if you're not going to be buying again and you're faced with, well, I've got to give up this mortgage, and any mortgage contract has a penalty associated with it. Having a prospective buyer assume the mortgage you have on your home or your property from you absolves you of that penalty, number one. Number two, absolves you of any responsibility under the contract. And number three, attracts buyers because now you're offering this incredible interest rate for the next, whatever it is, 2.5, 3 years, maybe even a year. And it doesn't even matter. Point is, over this course of the next couple of years, this buyer will have an incredibly low interest rate compared to what's available on the market. So an assumption is
seller, it's a very appealing way, if you have a low interest rate, to draw in some buyers, and your agent could be listing this on the MLS paperwork so that people are aware, right? Like
That's
that
right.
is a big carrot to be dangling right now.
Absolutely.
So what are the drawbacks for the sellers? Because, there's obviously a really great thing for them to be able to do that. What should they be aware of on the other side?
Absolutely. So an assumption in most cases is going to be required dollar for dollar. So the prospective buyer needs to be able to come up with the difference in down payment. Okay, so this works well if your down payment was maybe 20% or less, for example. In the last year and a half, 2 years, values haven't moved. Like, I mean, we've seen our values kind of stagnate recently, right? Yeah. So the gap there might not be so big. But if, for example, someone has a mortgage of $400,000, for example, and they're selling their property for $900,000, there might not be the opportunity for every buyer to come with $500,000 as of a down payment. So that might
make up the spread.
That's right. That's right. There might be caveats to this. Again, it has everything to do with the lending institution with whom you have your mortgage. So again, consult your mortgage broker, speak to your financing people, because they're the ones who are going to tell you what needs to happen for an assumption to be granted.
Would this work well if you're making a lateral move?
It could very well. Absolutely. Especially if your mortgage is, as a buyer, if your mortgage is up for renewal, or you don't have as an attractive an interest rate to port with you, this could also benefit you. Or if you're in a variable rate and they have a fixed rate at below 2%, this is, these are opportunities that can be had.
And so what's involved with doing an assumption?
So what's involved with an assumption? Again, it's another application process. You do need to qualify to take over the mortgage. However, in this case, you're going to be contacting the lender that holds the mortgage. You're going to want to have your real estate agent as a buyer speak to the selling agent and obtain the mortgage details from the seller's mortgage number, as well as financial institution where you can call to start the application process for the assumption. So that process might take a couple days longer than your traditional process, just because you're working with an internal division of the financing company, but it's a typical mortgage application. You're just specifically going to one financial institution.
So no lawyers need to be involved with this part of the process.
Not with the part of the assumption process, but typical every purchase transaction has to go through a lawyer. But assumptions, when approved, you don't, with every mortgage, when you apply for a mortgage, you get what's called a commitment letter, a letter from the financial institution saying, here's your rate and here's your term and here's all the things. With an assumption, you don't necessarily get that paperwork because you're just taking over someone else's mortgage. So they don't necessarily provide you that paperwork. So it's important to obtain all of those details from the sellers up front. And it's totally fine to request that information.
So if you're a seller right now in the market, this is and you have a great interest rate,
Mhm.
and it sounds like if you have a fair amount still outstanding on your mortgage, then this would also be a great thing, right? Because if you've paid it off and you have
Mhm.
$50,000, it may be different than if you have a mortgage of $500,000.
Mhm.
If you are a real estate agent right now looking for ways to either sell a property or to help your buyers out if
Mhm.
they're falling within a very tight budget, it might be worthwhile for you as the buyer's agent to talk to the selling agent because they may not be aware of this. And
Mhm.
as a selling agent, it might be a good opportunity for you to talk to your seller and say, is this a possibility? Would you consider this? How do we look at it and start marketing from that perspective? So
Absolutely.
3 great ways for people to work around.
Mhm.
All
I can
right,
also, sorry,
go
I
ahead.
don't mean to interrupt. I just wanted to add to that, with these assumptions, borrowers, new borrowers or purchasers can qualify better and afford
Yes.
more because they're qualifying at much lower stress test rates, right? Today's market with our interest rates, people are qualifying anywhere between 7.5% to 8.5%. That's a high rate to qualify at. Whereas with an assumption, oftentimes you're just qualifying at 5.25%.
So perfect for people that have been
Mhm.
wanting to move up for the past couple of years. The
Mhm.
market's been too aggressive for them. And if if they're sitting in a position where they've got some down payment because they've been waiting and
Mhm.
waiting, now is a great way for them to start going out and looking for this kind of stuff.
That's right.
So the final one, VTBs, vendor takebacks.
Right.
This one sounds nice and juicy. So let's talk
Mm.
about what it is.
Right. So a vendor take back mortgage is when the seller extends the buyer a mortgage of their own, so kind of like a private loan, either in first or second position. So in first position, you might see this if you're purchasing a property that's under renovation, for example, or you're purchasing a property where you'd otherwise look for private lending because you won't be able to secure financing through an institution. So there are specific requirements to have a property financed through an institution. So if that's to happen, the seller can say, well, listen, I want to sell my property to you. You want to say renovate it, for example. I will loan you the amount of money or whatever amount of money against the equity of the property. And once you're at a point where you can repay me, then you'll repay me and I will give you the property in its full capacity, whether that's repaying me in cash or you're going to now qualify through a financial institution, you'll repay me with interest. And so that's to the benefit of the buyer because they can acquire the property before they can actually qualify through an institution, number one. It's a benefit of a seller because they can sell it and also earn some interest on that loan in the interim. The times it happens more often, I should say, we see them in second position, where a buyer might not have quite the appropriate amount of money to they may not be able to qualify for as much money as they need from the financial institutions to close on the transaction. So again, a vendor take back would loan the prospective buyer a portion of their down payment as in the interim, again, collect interest on that money until such time that the buyer can say refinance or pay off the vendor take back loan.
So for the seller, they're not necessarily getting all of their money at
Mhm.
once
That's right.
as a reward, or the benefit to them for that is that they'll earn interest
Mhm,
on the money
mhm,
that they're now essentially lending
mhm,
to the buyer, and they can complete the sale. So again, depending on where the market goes and what ends up happening with inventory levels and demand,
mhm,
this might be another good way if you're sitting in a position where you don't need that cash instantly. If you are a seller who's moving up and you need all of that money, this may not be an option for you, in which case an assumption might be better because there's really then no ties. You're just giving them your interest rate.
mhm. That's right.
Whereas in this position, you still would be out the money. So this might work well for somebody if this is an investment property that they're
Mhm,
selling, if they are just not in need of the cash,
mhm.
or they're more in need of selling the property.
That's right. There's one thing to be mindful of, though. If you are seeking a vendor take back mortgage in second position, you must speak with the financial institution who will be giving you your first mortgage. Not all financial institutions are okay with a vendor take back mortgage. So do speak again to your mortgage professional to understand whether or not a vendor take back would be acceptable in a second position with your primary financing company.
And in this scenario, is a lawyer involved as well?
Absolutely. So you're going to end up with a couple of lawyers, right? So you have the vendor is going to have a lawyer who's going to act on behalf of them and the purchaser as well. And there's this additional contract because there's a second mortgage happening at the same time. So both seller and purchaser should seek legal counsel.
So similar to the assumptions which we just talked about, these scenarios can work for buyers and sellers.
Mhm,
Buyers, if your agent is educated on this, or you are now educated on this, and you have the opportunity to speak with your agent about it, they can start hunting for these kinds of situations for you.
mhm,
You want to make sure that you have a good team as a whole to help you through this process. And good real estate team means both a good agent, a good mortgage broker, and a good lawyer to ensure that this is really going to work out in your best interest overall.
mhm.
Have I missed anything there?
I don't think so, Jen. I think we've covered all three of the topics.
So I know that there's a lot of uncertainty in 2023, and the goal of Lena and I doing this video today was to look at different ways that you could maybe achieve what you're looking for. So if you're a buyer or a seller, what is really in your best interest right now? What can you get done? There are obviously different techniques, and you need to be working with a team like a mortgage broker and a real estate agent that is well versed in these different techniques so that they fully understand everything that's involved and you are well protected. So, we are doing a whole series of videos on mortgages and everything that people probably don't know about mortgages and real estate and how it all ties together. So if you would like to hear more from us, our handles are below. Be sure to check us out on Instagram and on YouTube. If you have any questions about what you've heard today or seen, feel free to send us a DM or leave us a message on YouTube and we'd be happy to answer.